What is up, YouTube? Welcome back to another video. This weekend there wasn't any backtesting updates because I was working on some trading stuff in private, testing out some new few things that I don't want to release in public. And the last 2 days of last week, Thursday and Friday, I did not catch or took a single trade. So there was also no post trading analysis video. But I was like, before the Monday starts, let's just update the crypto markets, okay? Because I've been posting on X, giving my views, my thoughts. But I was like, let's just wrap it all together into one compact video and talk about the potential future for Bitcoin. So if you guys haven't watched my tweets, I'm not going to explain it again why this is not the top. I suggest you go to my X and look yourself into why this is not the top. Now, originally, we were looking at this range right here, okay? Originally, we were looking at this range and we were calling it a potential Wyckoff schematic in the making, where we have our 1 tap, we have our 2 tap, we have our 3 tap, indicating a Wyckoff Model 1 accumulation, and where this could just be your last point of support, sweeping liquidity. Okay, that was the original idea. And what I also said is, for this idea to play out, we have to break structure from the top down, talking about this structure right here, making lower highs and lower lows all the way down. And we had to break that structure and that downwards trend in order to confirm this bigger Wyckoff schematic. Obviously, we did not break that trend. Right here, we failed to take out that high. Also back testing, the volume area low to the absolute cent. And then we rejected from there, going lower. Okay? Now we need to reassess, because this schematic, this Wyckoff schematic on the daily time frame, I would call the daily time frame, that's failing. Okay, we went lower, it's failing. Now, multiple things can happen now, okay? Because if we zoom out on the 3-day, if we zoom out on the 3-day and we pull our range to like this, if we zoom out on the 3-day and we pull our range to, and we have to draw a market structure from the top down, this is just one pull. We have a lower high, a lower low, a lower high, and a lower low. Why this is not a pull is because we don't have 2 consecutive candles closing lower than each other, okay? You have no 2 consecutive bearish closing candles because you have this bullish candle in between. Therefore, it's not valid structure to use. So on the 3-day, you actually have 1, 2, 3, okay, indicating a potential 1, 2, 3 in the making like this. But again, when would this model be confirmed? If you break structure from the top down, which obviously right now is that high all the way up there. And I think everyone at that point can say like, yo, if we break that high, I think we'll have that rotation towards the range high. That's not a very hard conclusion to draw once we break that high, right? But this is definitely a possibility that on the 3-day, this is still a valid schematic. Now, another possibility is that we just look at it from a weekly structure perspective, okay? And from a weekly structure perspective, first of all, we are not in a downwards trend. We're not. Yes, we're in this local downwards trend, which is all internal structure, but your main structure, which broke bullish right here from the top down, that broke bullish right here, that structure is still pointing up, okay? That structure is still pointing up. So this downward structure can be temporarily, okay? And it can turn into a higher low for a higher high on the higher time frame valid structure pool, okay? At any given time. Internal structure isn't significant, okay? You can have locally, on any time frame, you have locally internal bearish structure if you're in an overall uptrend, because how does price retrace otherwise? For a higher low, you have to have a retrace, indicating you have to have locally bearish structure, but it's not significant structure. So this bearish structure from the top down is internal structure. It's not significant at all. Okay, it's not significant. Let me make this another color because I don't like the black one. Yeah. So I want to clear that up. Okay, it's not significant downward structure. We have not broken any structure bearishly on the high time frame. Okay. Now, if we draw that weekly structure like I did, skipping over the earlier points because they're irrelevant now, and we pull it like this, you have two starting points. Starting point 1, starting point 2. And that's your range. So from a weekly perspective, you can say we just had our first deviation of the range low, indicating some sort of market maker involvement for potential accumulation in the making, right? So that could also definitely be the case that, this daily structure or this daily schematic, it turned into a bigger one. It failed because it wanted to turn into a bigger schematic where this range just needed a bit more time. So that's scenario number 2, Scenario number 1, we had that Wyckoff model 1 on the 3-day time frame. This 1, 2, 3, where, we potentially put in a test here and then have that V-shaped recovery, breaking structure, and then I will expect this range high to get tapped. From there, again, I cannot assess what price is going to do. Once we tap the range high, it's free game. It can do anything at once, okay? But that's scenario number 1, having that V-shaped recovery, being a bigger 3-day Wyckoff Model 1 schematic, and have that rotation towards the range high. Now, on the higher time frame, this can just be one deviation, okay? On the higher time frame, this right here will be your starting point range high, starting point range low, and then from there we start ranging, okay? And it can do what it wants, but we just have a bigger range on the weekly time frame, okay? Scenario number 2. In that case, this is just a simple range deviation. Nothing significant is going on, but again, for a rotation, you would have to break that high, okay? That's a very significant high to break. Another possibility, which I like a lot, is, if we keep on and we stay on the daily time frame and we had that schematic that failed. It happens. I've seen it happen before, where we have that Wyckoff schematic that fails and it just turns into PO3. Okay, PO3 meaning this is your range right here. Then you break down from the range. People thinking we're going to go to 20K, and it's just a manipulation of the retail positions before you have the expansion away. Okay? Before you have the expansion away. So this is a typical PO3 scenario. It doesn't have to be that pretty, this manipulation phase. It can take longer. It can go deeper, But overall, this would be expectational order flow, Have that range. Have some sort of a range in here below the massive range. Create an accumulation, get acceptance back inside the original range, and then have the expansion to follow. Okay, in that case, expansions are very aggressive, especially if you have liquidity on the left like this, with lots and lots of stop losses. The squeeze will be aggressive. Now, looking at this range now, we had that demand zone below us that just got front run. Pretty funny to see. Let's reassess it on a lower time frame, okay? We just had that deviation of the range. What's going on the lower time frame? Now, we know that this is the most important high to break, okay? But that's very far away. Do we have any signs locally that could potentially indicate some bullish price action? Well, we can dissect the market structure between this leg and this leg, to confirm any local bullish breaks. Now, market structure from the top down on the 1 hour, skipping past a few points, we have the last pull is lower high, lower low. So this right here is your high to break, okay? Once we break this high, we could potentially get a rotation up towards that more important high. We have some resistance to pass through, but the step 1 is breaking this most internal structure leg from the top down, back to bullish, to potentially confirm a rotation back up towards the more important high, and from there we'll have to reassess. But this is your most important high to break for any bullish price behavior. Now, Obviously, we failed to break that high. We had this 1 hour supply zone. We had that 1 hour supply zone up here. And then we got that rejection. We came in there actually putting in a very nice distribution. So as you can see, we came up here making higher lows and higher highs, formed a range right here, deviate that range high like this, indicating a model 2 distribution. This swept liquidity on the left, broke structure. We zoom in on the lower time frame, you can see it more clearly. There you go. Model 2 distribution, broke structure, which would have actually made for a pretty nice short right here. Stop loss above that high. And then, yes, it's only a 1-to-1 risk to reward, but, it had the potential. It had the potential, okay? However, this happened on Sunday morning, 5 a.m. So I wasn't awake at 5 a.m. on Sunday to take this trade. But still, we had that distribution actually also breaking the range, right? So pulling our market structure from the low up, we had high, low, higher low, higher high, higher low, higher high, higher low. And then we had that range formation. And then right here after that distribution, mitigating supply, we broke from the range. And since then, we have just been creating lower highs and lower lows. Where for all the newbies out there, this is a wick. That means it's an SFP, swing failure pattern. That doesn't mean it's a break, okay? Actually means that this low is weak. So downward structure after breaking that range, okay? And this actually kind of confirms our potential idea of, if we get rid of that, this actually confirms our idea of this potentially becoming our new range, okay? So once price starts hitting that EQ, hovering around here, this range will be confirmed. And we could actually have a potential new range, which could be very nice to trade because we have that, we have that low that just front ran that good looking demand zone, right? We have that low that, could be could give us a very nice long scalp, okay? Coming back down and then eventually sweeping that low, breaking structure back inside the range. There's your trade, okay? Because I've previously also stated in Discord that I don't like this low. I don't like this low. I don't like this low at all, right? We had a very aggressive candle down, and from there we just had a higher low and we went up from there. We never took the initial low. The same way I don't like the low here, the same way I also didn't like the low right here. The exact same thing happened here, where you put in the low, and from there you just had higher lows and higher highs, okay? Grinding up. It just leaves a trail of liquidity, and we know Bitcoin loves to go from liquidity to liquidity. So I really don't like when you put in a low, and from there you never take the initial low, okay? That's not how good lows are formed. You always want to take the initial low. So the exact same way we got that bounce here, creating higher lows and higher highs. I don't like this low. So I would love that low to go, okay? I would love for that low to go. And we have been rejecting from that 1 hour supply zone we got there. This range isn't confirmed, but I would just love it for this to be just our new range, okay? And then we can just have local scalps within this range until we take any extreme points, and from there we can potentially get in any swing plays. But as of so far, I cannot really give more than that on a macro perspective. We're deviating the range low. This range low has not been broken. I want to clarify that. This range low has not been broken. We can even come a bit below 50K and this range would still not properly be broken, okay? Just from a range deviation threshold perspective. But I wouldn't really want to lose this this low in order to call it, still a range deviation play. In that case, I would call it more like a higher low for a higher high on that weekly, because I do think if you break this low, you can come towards, actually below that low is also a POY. So yeah, I'm not really that bearish. Did that get mitigated? Let me double check. No, this actually didn't get mitigated. It's actually part of a demand chain. You see that? How this order block right here created that demand chain? That's pretty nice to see. And it's actually below. We just front ran that. I actually remember that trading that range. Yeah, so I was also thinking, how can Bitcoin screw up or screw us the most? Okay, I was thinking, how can Bitcoin screw us the most into thinking that we're going lower, but we're not. Okay, and I was kind of comparing, this range that we were in to Pepe and to Pepe's range breakdown before we went crazy high. Okay, so let me clarify and let me explain. Looking at Pepe, right? Looking at Pepe right here, what we had is, let's say this is Bitcoin's previous all-time high, okay? Let's say this right here represents Bitcoin's previous all-time high. Bitcoin's all-time high 2021. Let's just say it does, okay? Let's get rid of that background. This represents Bitcoin's previous all-time high. And this right here represents the range that we're currently in, okay? So comparing this on a macro time frame, this is the all-time high, or this is the all-time high, and we took it and we started the range. And now we're breaking down from the range, okay? I'm kind of comparing it to Pepe, where this is, Pepe's all-time high, and then we deviated to form a range. So this is Bitcoin's price action on Pepe. Now, zooming in on this range, there's one difference, big difference, and that's where this range had a proper distribution, okay? This range had a proper distribution where you had the 1 tap, you had the 2 tap, you had the 3 tap. Model 1 distribution, target was the range low, it got mitigated, it got tapped, okay? We actually traded this in our backtesting video on Pepe. Now, besides this being a distribution, let's still look at it from how it pumped. What did it do before this range? It kind of broke down. It looked like it broke down, but then it just pumped from there massively. Okay, so I was kind of looking at how does this develop? Okay, now looking at this, we had our initial range. Like this. Let's extend it. And then we had our range low. So we can call this our range. Let's call it our range. And then from there, we broke down from the range, coming into pretty significant demand right here. So we broke down from the range once. And then people were like, okay, maybe this is a PO3, right? Where this is your manipulation. Right here, this is your manipulation. And then we have the expansion to follow. And on that first manipulation wick, we actually hit a significant POI, which was that high, okay? So this was the big range demand, okay? This was the bigger range demand right here that got mitigated. And then this zone right here was the more refined zone, okay? The more detailed zone. So let's remember that. We had the range and we had to break down from the range, forming yet another range, okay? And then a lot of people were, talking about how this could potentially be a PO3, where you have the range, you have the manipulation, you have the expansion that followed. But what happened is we actually broke down yet again from the manipulation range. So then you can become like kind of worried, and people were stressing, right? Of, oh, fuck, this PO3 is now invalidated because we broke down from the manipulation range and the PO3 is invalidated, this can go lower. We're breaking down from the range, we're breaking structure, we just SFP'd, a very significant high, can cause a lot of fear and a lot of doubt. Now, what ended up happening is that this whole range was your manipulation range, right? And what followed was the expansion, where the manipulation range had its own PO3. So in the manipulation range, you had your initial range, right? You had your initial range that we were talking about right here, your initial range in the manipulation range with a breakdown, which was the manipulation in the manipulation right here. Bottom, boom, double manipulation. And then we had the expansion right here, expansion. Let's get rid of one, boom. So as you can see, we had a PO3 where the manipulation phase itself had its own little PO3. And there was a reason for the manipulation phase to have its own PO3 because we had that more refined demand zone waiting below us. Okay? So going to Bitcoin now, I'm thinking what would screw up most people? Because I already see a lot of pictures. About people drawing this PO3, right? Where we have this range, and then people will call this the manipulation right here. And then we have the expansion that follows, right? And this is not time sensitive, by the way. These boxes can be bigger, okay? This is not time sensitive. Oh, expansion. Expansion. There you go. Let's post it correctly. Voila. Nice. So I'm already seeing a lot of people talking about this scenario. So I'm like, what would screw most people? Well, I think what would screw most people, if we look at Pepe, is to have a deeper manipulation phase with that break, where the manipulation phase has its own PO3. So let's say this becomes the range, right? Let's say this becomes the range. We go down, we go up. And then people will, start looking for a manipulation phase in here. But then after ranging for a while, this range also breaks to the downside. Right? And then right here is where you form that manipulation phase, and then you pump. And then you pump. And then you pump. So this whole thing would be our manipulation in the bigger PO3, where the manipulation phase itself has its own little range with its own little manipulation within the manipulation. I don't know, let's call it flip. And then we have the expansion that follows right here. Like, how sick would that be? I think that will mess up so many of us. Like, this right here, screenshot it in case it happens, because that would be sick. But this would mess up a lot of people. Like, I'm talking a lot. Because you will have all the people thinking right here, we're going to have that PO3, and that still have hope, right? They have hope that this is going to be a PO3. And then right when we have that break of structure right there, and we actually dump down more, all the way from 53 to 50, they will lose it. They will literally lose it, and they will finally give up on their idea of this being a PO3 is wrong, and that's when we'll have this effect, and then we go higher, right? Like, this would mess up a lot of people, and it would just be beautiful. It will be beautiful. So I'm just saving this pic for later. Yeah. So that will just be amazing. And trust me, when this happens, this squeeze will just be as hard as Pepe's squeeze. Like, look at that squeeze. It will be a few days max, like 1 to 2 days maybe. Like, literally 1 to 2 days, and you'll recover that whole move. And it will happen when people least expect it. And it doesn't have to be this pretty, It doesn't have to be this pretty, but you'll get the overall objective of breaking down from the range. People still have the hopes of it being a PO3, and then you break down again, and then you lose that hope, and all the bears will finally start celebrating extra hard of, I told you we were right, and then we'll have that massive pump up. So this is definitely an idea that I'm eyeing just because we also have that daily order block there, right? We have that daily order block, and it's backed by that range demand. Whenever you have bigger range demand overlapping with an order block, where that order block is also part of a demand chain, oh, it would just be so beautiful. It will be so beautiful. And again, I'm minding you that this is not time sensitive. Okay, this is not time sensitive. So this manipulation phase can be extended, but overall the vibe of this would be amazing. It would just be amazing. And once I see it develop, I will update you guys live, of course, and we'll talk about it in more videos. But as of so far, this is like my most preferred scenario, because I'm starting to think a PO3 would just be too easy, because I'm seeing so many people talk about it, and not many people know about PO3s inside of other PO3s, right? They're not that advanced. So if you're watching this video, you're lucky. Because I have literally seen it happen multiple times. That's why I made the reference to Pepe, because that was the most recent one on the higher time frame. So let's get rid of this again. Put that range back right here. Put that range back. So far, let's put that demand in it. Because so far, I cannot tell you about if we're gonna go up, if we're gonna go down, because for that, again, that V-shaped recovery, you would have to break that high, which is less likely now because you're already failing to break the most local structure high, which is right here. And then I can also not tell you we're going lower, because we are at range lows. We're literally at the range low as we speak. Like, it's the exact range low. But we could be forming a more significant range in here, because price cannot trend down for so long. As I've discussed earlier, it's trending down for way too long. It needs more liquidity, so overall, until we start losing, literally until we start losing 38, I will become pretty bearish, because from there you have nothing but liquidity to mitigate and or liquidity to grab. But this whole range is range demand, but I would prefer if we bounce from the upper echelon of this range demand. Okay, yes, we can come down here, which is a more refined zone, but I would prefer to just stay up there. Okay, I would really prefer to stay up there. So yeah, that's kind of it for me tonight. Let me check if everything is going okay with the sound still. Yeah, that's it for me. Recap it. Scenario 1, we have a V-shaped recovery, where this is a 3-day Wyckoff Model 1. Scenario 2, we have weekly market structure points with 1 and 2, and this is a simple range deviation. Scenario 3, we have that PO3, a simple PO3. Scenario 4, we have that massive PO3 trapping hella people, okay? Which is my preferred scenario. But so far, we're not showing any signs of strength, because we're failing to break even local structure from the top down. And yeah, we also haven't broken structure from the low up, though. So the structure from the low up goes something like... Now we have broken structure from the low up. Okay, I take that back. So yeah, I'm hoping for a new range here. I will be trading the local scalp moves as always, and I will update you guys in any post-trading analysis videos. If you've watched it so far, you're gonna fucking make it. We're all gonna make it this bull run. We're literally gonna walk away with millions together, and we're gonna be remembered, and people are gonna regret not following us sooner. Okay, love you guys. Peace.